Morning. It is a Friday, back with the Everyday Growth Advisors live stream. I hope you guys are having a great week. Well, I know some of you are hurting, but it never hurts to have a great week. Especially if you've been watching the live stream since last Friday. Am I right or am I wrong? If you have been watching the stream since last Friday, you would have woken up smiling yesterday instead of crying, okay? Because we've been talking about hedging our portfolios for 3 whole trading days. Friday, Monday, Wednesday. I said it all 3 days. Hedge your portfolio. Buy some UVXY calls. Buy some puts on SPY. Buy some puts on SPY. I said it 3 whole times. So you guys had every reason and every way to do it. And if you didn't and you said, yeah, you know what? I'm not gonna listen to this one guy on YouTube because you know what? He's not that accurate. That's fine. That's completely fine. I'm just saying though, it pays to listen sometimes, and the insurance that you would have bought would have paid you big time yesterday. It in fact paid 500% to majority of the people who were holding those calls yesterday. So I did close out my UVXY calls yesterday, and I was smiling because I was not afraid of this market drop. And the reason is because, well, I'm going to go through it in a second. But you know, we have a flow and we have a way to do things, and I'm not going to skip over the things that we have to do before we got to get where we are going to get. So let's go through the process. And first things first, I want to say thank you guys for coming in into the live stream and supporting me these Mondays, Wednesdays, Fridays. It's hard work. Yes, trading is work, and you have to put in the work in order to get it done. The only great thing is you get to come here and chill with me while I do the work. So it ain't that bad, but it is work, and I appreciate it. And I see you guys being here And I love all of you guys for supporting me on this journey. The Everyday Growth Advisors has grown a substantial amount this past 2 months, and I am truly blessed to have you guys as supporters. So I want to thank each and every one of you guys through this time. All right. You know that I only ask for one thing when you attend these live streams. It is to smash the like button, because that will make the YouTube algorithm go gaga. And I would appreciate it if you did that. So, good morning to all of you guys, and let's get this party started. You know how we do it. We cycle through the news to figure out if we're bullish or bearish. If the news is cycling bearish, we take opposing positions. If the news is bullish, we take opposing positions, right? We don't read the news for any type of information, because the news doesn't tell us something that's not already priced into the market. Once news breaks, it's not useful to us. The market is like a mechanism that reacts instantaneously to any news, right? So hence, it is a fool's errand to see a piece of news and react onto it. Sometimes it works if there is a Fed interest rate change or, a bigger form of news, but many news things that come out, like, company specific, or I want to say, even earnings for that matter, right? If you didn't know and didn't secure your position before earnings happen, it's useless, right? So not trying to, rain on anybody's parade, but reading the news is not what traders do. And we absolutely do not make decisions based on the news. We just guess what is the direction the news is going with. So today's news is cycling a mixed sentiment. We have, first of all, Morgan Stanley, who are long-term bears of Tesla, cutting Tesla to underweight once again. They're not happy with them, right? Let's see. Formula One canceled in Singapore, blah, 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 across the world. That's kind of sad for all the people who love race car drivers, right? Musk can reduce COVID spread by 40%. That's an interesting one. And we have U.S. futures bounce back, treasuries decline, markets wrap. Nothing much on Bloomberg. Honestly, very mixed sentiment, and they're cycling things that are non-market related. Futures are up green, but does that mean we will be green? Well, let's go through it together and break it down. Let's go to the Wall Street Journal first, and then I want to cover something else. We'll get to the technical of SPY and my bullish and bearish thoughts in a little bit, because I always give both options. I like to give you the power to choose which one you want to follow with. So U.S. stock futures rallying following a sharp sell-off. There is some data and statistics that backs that every time you had a 5% drop, something happened. And then COVID-19 hospitalization surge in some states. This is, it was kind of expected that everybody was riled up, went onto the streets, and crazily risked having, a cesspool of virus interactions. And now they're kind of paying for that, right? So it's not a surprise that we're seeing an uptick. Now, is the uptick really bad? That's the question that you got to ask yourself. And we're not going to be able to tell until the next few, days. And so, it's not really, we don't know if the second wave is going to hit as hard. And I'm going to get to this in a little bit. I don't want to jump ahead of the stream right now, because I want to go in a certain fashion so that you can understand the perspective and the flow of the stream. The stream has a flow, and I like to follow the flow, because the flow makes you good and makes you feel good. All right, I'm done singing. Sorry, guys. I promise I'll never do that again. Okay, so the early coronavirus warning that woke up Wall Street. Great. There was some guy who bet against Wall Street. Trump drives economic message of as poll shows he has few strengths. Trump did say a very bullish tweet yesterday. I'm not sure if he was trying to prop the market up, but he did say, we're close to a vaccine. This is nothing, blah, blah, blah. That was interesting. Okay, so news to cycle through. You can tell that the sentiment is very mixed. We have news talking about the surging of cases, which is slightly bearish. And then you have stock futures, which are rallying, which is slightly bullish. So how do we know where this market's going to go? Well, we don't. But we can make an educated guess based on probability and statistic, which are my two best friends. Okay, so another thing that I want to just kind of hover over for a second. Today, Southwest Airlines, which I've been talking about for the past 4 streams at least, has been upgraded because of the best-in-class balance sheet. This is Very, very important, because if you guys realize, you remember how many times I have showed you this Excel sheet that me and my mentees had put together during the Everyday Growth Mentorship Program, right? And we had done a deep dive analysis on 6 airlines, right? And this was based on their financials and their 10Ks and 10Qs. Now, guess which one was ranked number 1? Da 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 da! I have been saying for a while that Southwest is the best in its class. So now we have some analysts that are coming out and saying the same thing. The stock is reacting favorably. Pre-market, it's up by a couple of percent, right? Almost, I want to say, I'm not sure how much of a increase this is, but it's a hefty percentage points. I want to say 6 to 7% at least. So it pays to listen to the stream, guys. It pays. It pays to show up, listen, and make moves based on what I'm telling you. Because I do the analysis for you. I'm not necessarily going to tell you, hey, you need to play this, because I don't believe in hand-holding. I believe in the fact that I'll share the news with you and what I've found and what I'm analyzing and what I'm researching, and you can make 2 and 2 to make a trade, right? Okay, awesome. So that is one thing that I want to cover. Southwest doing that. The next thing is, let's look at now the pre-market movers. The pre-market movers today, we have Hertz up 50%. Now, remember that Hertz is heavily short squeezed right now. So expect this rally to go on for a little bit, because there are a huge number of shares, almost, I want to say 40 or 50% of their shares, which are being shorted right now. And so you have to be extremely careful when you're looking at Hertz, or looking at, the fact that Hertz might go up further. I would not be bullish so much because the company is filing for bankruptcy. However, we have been talking about this on the inner circle within the mod chat in Option Swing, that, we may sense that Hertz may get kind of consolidated, merged, or acquired by another company, which is it makes a lot of sense. Think about it for a second, right? If you think about it, Hertz has a lot of assets, right? Well, they're considered liabilities because they have down payments on them, but cars in themselves that they would go bankrupt with would have to be sold off or liquidated, and there would be a preferred class of shares. If they do go through bankruptcy, then shareholders would get a certain amount, if they get anything at all. And so it makes more sense if Hertz were to get somebody to buy all their assets even if at a discount. They probably will get better values than to go bankrupt. So this is just the way I'm thinking about it, okay? So there are 2 equally pressuring points with Hertz. The first is they could get bought out, acquired, or merged. The second is the stock is heavily shorted, so hence it can get squeezed out. It can get squeezed higher, okay? So think about that for a second and just process it. I don't know how you would take it, but this is what I'm looking at, okay? American Airlines rallying again. Airlines rallying. Isn't that weird? Airlines, cruise lines, they're all rallying on this drop, which means to say that people are still, thinking that this drop was actually an opportunity to buy, okay? And that's kind of the sentiment that I'm going with, but I'm not going to get there so quickly. We don't want no premature ejaculation here. We want to go slow and steady. So let's continue this analysis here. We have a whole slew of economic news coming out today, but nothing really super important. Export and import prices, which will contribute to GDP numbers, will be sometime around now, this was worse than exports were worse than expected, and imports were better. So, mixed sentiment once again, okay? Let's see. Nothing else apart from that. FOMC members going to speak, but not really high impact news there. So nothing else high impact news, okay? This is what we're looking at today. We have a mixed sentiment market. Now, let's look at the technicals and see what we can have a look at. You know me, I like to look at SPY. Now, right on the other time that we went on this live stream, the previous time, I did say that if we were to, I said consolidation up here and drop, right? This is why I was telling you guys to hedge. I was saying buy some protective puts, buy some UEXY calls, right? This were the 2 things that you could buy, and you would have made a killing yesterday, right? And I did say the first level to bounce at would be 23.6. We didn't bounce. 38.2, we bounced. So this was the level that we chose to bounce at. Now, if you realize, the actual bounce was on the 200 moving average. This is the 200 exponential moving average for the SPX, which is SPY. SPX is just, a bigger, well, it's like SPY times 10 basically. But we bounced on that level, and it seems like we will continue to climb back up over here. Now, there are two outcomes, right? The first outcome is to kind of arrive at the 3,120 level. I want to say this is the range that I see SPY coming to for a possible range where we will bounce. Okay, so this over here will be your supply zone. So expect SPY to come up at least to here before making another move down, or it depends on what happens here. If this was a impulsive wave, so we're gonna have a corrective wave up to here at least. And I'm going based on technicals now. This is no fundamentals involved. I'm just saying technical analysis. We do a technical breakdown every stream, so I want to give you the technicals, okay? A bounce back up here would mean a corrective wave. And then if we want to do a impulsive wave again, that would be down to this region here, the 50 and the 61.8, which is where the next zone would be, okay? So that would be the bearish case. Now, the bullish case would mean that we go up to this supply zone and then meet some lovely bears up here who push the price down but aren't able to go lower than the 200 moving average, which means we will end up bouncing on the 38.2 Fibonacci retracement, or we may also bounce on the moving average, which is the 150 moving average, okay? So there are a couple of ways that this can go, all right? We're gonna have to see how this pans out. Am I gonna trade anything today? Well, there are a couple of things that I'm looking at. I do like, and I traded Shopify yesterday, but I got burnt. But I do like Shopify as a stock, especially if, there is a real chance that we do see a second wave. Well, more people are going to have to shop online, and Shopify may make a deep rally. There was some flow on the stock yesterday, almost $6 million worth of calls bought for next week expiries at $750, $730, $700. There was some in the money calls and then some out the money calls bought. So there is a real possibility that Shopify can rally back up. Okay, so here is one of the stocks that I'm looking at. Now, before I get into the stocks and the tickers and all the breakdowns and this and that, I want to also go through another important thing. You have to realize that the S&P 500 PE ratio is still hovering in the median range. Okay, you can see that the median is actually about 14 or 15, but we're slightly higher, and you can see the median. This is historical median, but if you go back to just where we have been in this range, it's around this level, right? We are still not overvalued in terms of PE ratio, which is the price over the earnings. Okay, and so the price of the S&P 500 versus the earnings of all the stocks within them are not overvalued yet, compared to the 2008 financial crisis, compared to the dot-com bubble, right? So once we do see spiked up valuations where the PE ratios are out of this world, then we can start to effectively really short SPY. But we don't see that yet. Now, in fact, the other thing that you need to understand is that the SPY dividend rate, right? The dividends for SPY are actually higher than the 30-year bonds. So what does that mean? That means that it's more attractive to hold S&P 500 than it is to hold bonds. And if that's the case, why would you want to be risk off, right? If the yield on bonds is lower than that of the market, then you would throw it into the market, right? So let that sink in for a second, okay? And I think that we will remain risk on until this level drops below the level of the bond rate, okay? So that is a bullish outcome. I'm talking about this drop that we saw is a nominal drop. It is a 5% correction. Well, it was actually 7%. It was a 7% correction down to the 200 moving average because we were going into a overheating. Okay, this is when we have a euphoric phase, and you know, it gets to a point when stocks are just going higher and higher and higher. Well, retail traders were probably buying here. And that is the reason why, when I have been talking about it since last Friday, I've been saying, do not go overly bullish here. Why? Because retail traders tend to pile in towards the end. On a wave pattern, okay, when they see something going up, they always ignore it here. And then they ignore it here. They ignore it here. What they do is they start piling on only here when it's the last wave, and they think that, oh my God, the market is making new highs. This is the time I should start getting in, because at this point is when everybody starts to tell them. Their barber talks to them. Their doctor tells them, hey, did you buy Tesla stock today? Or, you know, somebody asks them and says, wow, look at the market. Why? Because the news sensationalizes it and tells you buy, right? We had that happen exactly 2 days ago. And I said, the news is starting to be bullish. This is where you have to be careful. This is how you spot these things, okay? When the news is overly bullish, you start to sell those positions. Why? Because retail traders read the news and they get gilly-whacked. So you need to understand these things. They happen all the time. You can't fall into the traps, okay? Great. Now we're done with the technical analysis for SPY. We can finally answer some questions and get this party going. Wow, all 200 people of you, welcome in to the Everyday Growth Advisors live stream. I appreciate you guys being here. Make sure that you smash that like button. That's all I want off you guys. If you missed the whole spiel of what I just went through, I highly recommend you to watch the replay. It will be up in a couple of hours, maybe 1 hour, 2 hours. So hit the like button. It don't cost you no money. And if you don't hit the like button, then I don't get no honey. And yeah. Cool. Let's go through these messages. I'm do a little pee and see what's going on here. Happy good morning, happy Friday. These beats are fresh. If you want to know who these beats are by, look in the description. I left a message there. These beats are by one of our members on Option Swing. His name is Type9. His Instagram handle is on the description. Go check him out. The guy has some fire ass beats. I would recommend you to go check him out. Leave him a like. Tell him you're here from the Everyday Growth Advisors live stream. You know, send him some love. He's great at what he does, and he has so much passion. That's the reason why I love using his beats. All right, let's see. Good morning. Smash the like button. Thank you very much. Warrenville, welcome back, man. I appreciate you being here. Appreciate the advice of grabbing insurance. Accumulated VXX 3650 calls June 19 over the past week. Made a killing. Absolutely amazing, bro. I'm so glad that you did that. Should I sell it or roll it over for a long expiration and a higher strike price? Okay, great question. And I know that a shit ton of you are going to be asking me this question today. Do I continue holding these insurance products, right? Well, the question is whether you see the market going bearish, okay? Now, personally, for me, my advice to all of you guys, and I'm going to answer all of it in case you guys, ask me this question multiple times over and over again today, if I should be holding VIX or UVXY or SPY puts. You can hold them, but don't go balls deep in these positions. They are insurance products. They are not meant to be the main meal. They're not like a buffet. You don't go there and eat everything. You buy a certain amount and you sprinkle it on your dinner like a spice, right? You don't make spice the main dish of your meal, do you? So insurance products are like spices. You got to sprinkle a little bit on your portfolio and just protect it. Because in times like this, when you have a drop like that, you saw what happened. You banked on those calls. So it pays to buy them from time to time. And personally, you should start buying them only when the market gets overheated again. So when do you buy them? You should start buying them when we enter the supply zone up here, right? That would be 312 or 311 on SPY, right? You can take a baby position, but should you buy it today? I don't think so. Personally, today, I'm going to be sidelining the market. I'm not even going to get into any trades at all. Why? Because I don't like the way the market's moving. And you have to remember one thing. Asia didn't really open up that green, number one. Number two, okay, after a drop like this, a couple of things happen. The first thing is, this is a Friday. Today is Friday, which means that institutions they're not going to open up a lot of positions, okay? And the reason why is because of the same concept and the same idea that I always tell you guys. Over the weekend, you do not want to donate to Mr. Theta, okay? Mr. Theta, he is a very hardworking man. He does his work over the weekends too, okay? And so if you take positions and hold them over the weekend, what happens is you're paying Mr. Theta money. And then on Monday when you open up, you've just paid Mr. Theta money for 2 days for absolutely nothing. So don't open up any positions today, and instead reassess how the market goes on Monday. After you come into the live stream on Monday, we've had a whole 2 days to decide what's going on with the economic structure of the market. We see what's going on. Is the cases increasing, decreasing, blah, blah, blah. A lot of news will come out by Monday, and you'll get a better image of what's going on. Now, I forgot to cover something very important. The first thing is, look at the outcomes of the S&P 500 performance after a 5% decline, okay? This is probability and statistics, okay? So, out of all the times when we had a 5% or more decline, or a ballpark figure of 5%, the next month, week, or year were positive, okay? We have above 50% track record of the next day being positive, of the next week being positive, of the next month being positive, the next 3 months, 6 months, and the next year being positive, okay? Now, obviously, this is a skewed statistic because this doesn't mean jack shit if you account for black swan events, which are events that are like coronavirus or the financial crisis or the dot-com bubble, right? But it always pays to know the statistic, right? And you have to remember one thing. It's no point to be overly bearish at this point. Why? Because we've already been through the coronavirus crisis. And it's not like we're all back to work that businesses are going to be affected again. Dude, we barely opened up. It's been a week. It's not like businesses are like, oh, we've just made $1 billion and now we have to go through another crash. No, we literally haven't opened up yet. Like, we were trying to open up and then some protests came in and then this happened and that happened. And now there's a second wave. Well, great that we have a second wave right after the first wave and then we didn't wait in between, right? Well, I also feel like the news is kind of over sensationalizing this. Obviously, I'm in all seriousness, you know, there is a real possibility that we can head down further, right? But just from my perspective, I think that we will rebound quicker than we will fall. I don't think that there's a real downside. And if there is, I feel like the bottom would be somewhere around here or here or here. We're definitely not going to go like crazy like the last time, okay? Because we already know how to deal with this now. And we are working on vaccines, we have Trump in office, he's going to rile up the stock markets and this and that. I'm not being political in any way, by the way. I am absolutely neutral, just like my name, Neutral Tyrant, all right? So remember, there's no need to be scared or saying, I'm going to go. Like, the biggest mistake people tend to do is the moment the market moves like this, they say, all right, let's all go balls deep in puts. Let's go, man. Yeah, let's go. And all the Wall Street bets people, yeah, they're all going to be posting things like, oh, I just put my entire college tuition, $30,000 in this one SPY put position. And they're going to rile you up. So don't listen to nobody. Listen to what the news is saying about the economy and make your own decision, because the news tries to overanalyze things as well. And so you have to be careful with these things. All right? Cool. Sorry, I didn't mean to rant that much. By the way, if you're in here for the first time, click that subscribe button and like the stream. We do this every Monday, Wednesday, Friday. This is the Friday version of the stream. We did go through a whole bunch of stuff earlier. I hope that you were here to see it. If you didn't, feel free to tune into the replay later. So let's go through these messages here and see what's going on. Great. TGIF, welcome. First time watching the stream. Welcome in, Sri. Appreciate you being here. Do you think it's going to be a pump and dump today if you have crowd contracts, blah, 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 call expiring next week? Let's see. Crowd. I do like this company. Yeah, definitely. I mean, it's kind of holding well if you ask me. You have 110 calls though? 110 is a bit far out. I don't know. I would do like 105 personally. Your strike's a bit far out and your expiry is too near. That's the problem with this contract. It's not whether we're gonna pump or dump. It's the contract's off. He did say it 3 whole times. I was here. Exactly. I said it 3 whole times, didn't I? Buy insurance, right? What do you mean by hedging? Hedging is a position that you take when you are extremely bullish. For example, the entire stock market was going up and up and up and up. What do you do is you buy a opposing trade to your existing portfolio position. So if the market is going up, you buy a contract that will allow you to make money on the downside. And so this doesn't become a majority of your portfolio. It's a small percentage of your portfolio, maybe about 5 to 10%, and it hedges. That's what we call hedging. You hedge your risk. Hello, when the market gap up and gap down, how do you play it? A gap up is usually a bullish momentum play, and a gap down is usually a bearish momentum play. Good morning, Jason. How are you doing? Good morning. Good morning. Mr. Smash that like button here. Do you recommend holding UVXY over weekend just in case another dip? Thanks, big guy. No problem, Kevin. I don't recommend holding anything over the weekend. I don't like the idea of donating to Mr. Theta. I'm telling you, if you just stopped buying contracts and holding them over weekends, except for leap contracts, which have negligible theta, you will save yourself a shit ton of money, okay? Welcome into the stream. If you're here for the first time, make sure you smash that like button. Smash that like button. Let's get to 120, guys. Come on. All right. Morning. Is it late to get UVXY calls? Absolutely late. Yes. Too late. Way too late. If you want to get UVXY calls, get it at the supply zone that I was telling you about. That would be the level up at 3125, which is 312 on SPY. However, as I said, market could melt higher. You never know. I don't recommend it. The time to get it was last week when I was saying it, guys. Come on. VTIX made a killing yesterday but didn't know enough about it and held. I feel like nobody will want to hold stocks over the weekend with COVID spiking. Absolutely, I agree with you. That's all you got to say about it. Can you talk more about a hedge? I want to learn from yesterday for future days. Do we have a UVXY at all times, let it expire, or is there a way you do it? Thanks always for the gems you provide. Absolutely. So yes, I don't have it all the time, but I pick opportune moments. Moments like these were a no-brainer, right? If you see the market consecutively go up for 13 days straight, come on. I'm sure you understand that that would have been grounds to buy some positions to hedge a downside, right? So that's all I did there. It's not about you buying it at the right time, like per se. It's about you picking the right moment and buying them for a week at a time, right? Or 2 weeks at a time. Like personally for me, I bought my hedge out for a month because I don't like buying contracts for short expiries until and unless I'm day trading them, okay? So that's how you play that. Good morning, happy Friday, good morning. Hit the like. Thank you for hitting the like, guys. I appreciate you guys. Smash that like button. What is the app you use for drawing? This is called Ink2Go. Smash the like button and check the podcast. Absolutely. By the way, I forgot to even mention that one. This is absolutely nuts, right? If you would have listened to the podcast with me and Mike Moss yesterday, and I'm telling you, if you have some time, listen to this podcast. This is a very, very, very important podcast, guys. Go listen to it and smash the like button here too. Please smash the like button on this one if you can. I would really appreciate that. By the way, I'm working on putting these podcasts up on Spotify and iTunes as well, so stay tuned for that. It sounds easy, but it's not that easy, man. I don't know. If somebody from Option Swing knows how to set up a podcast on Spotify or iTunes, could you please kindly message me? That would be really nice if you can. I would appreciate you so much. Okay, another thing that I want to mention about SPY that I forgot to mention earlier. Man, so many things to mention. Here's something important. Open interest on SPY today is 1 million contracts, 1.5 million contracts, and look at them. They're skewed to puts. Okay? What does that mean? There's a very high possibility that these contracts get squeezed. Remember, when you are an options trader, you don't hold the power. The person who holds the power is the person who holds the underlying asset. Now, if institutions are holding a shit ton of SPY and they didn't sell all of it and they buy a shit ton of SPY today, well, guess what that does to your contracts? So remember, when you buy an options contract, you're buying a derivative. See, this is the reason why people jump into options too quickly and they don't understand these concepts and then they just get smashed. Yeah, I can't count the number of people who said in option string chat yesterday that they got absolutely wrecked because they didn't do portfolio management and didn't understand what an options is in the beginning, right? So remember, you don't have the power. It's the person who's holding the asset that has the power. Okay, cool. Let's have a look at this. Okay, so on Wednesday, I entered a KO 4850 put 619, 90 cents premium. Yesterday, I noticed it spiked up. I felt confident, yet I pulled out too early around 10 p.m. yesterday. Yesterday, and I would have been golden in the afternoon to sell. My question is, how can I avoid getting out too early? Well, so this is a great question, and I'm gonna share with you how you could have done that. So, you bought it at 4850. Okay. Well, interesting. 4850 put. Oh, okay, put. Great. Okay, cool. So, what do you do is, for example, okay, say you enter a put here, right? Okay, you're in profit, right? What do you do is you basically set a stop loss, right? And your stop loss is initially here. Let's just make the stop loss a red line just to illustrate what I'm saying. This is your stop loss, and initially your stop loss is going to be above it, right? For all trades, we put a stop loss on, especially if you're doing a day trade, right? So then what happens is, as your price starts to come down, you move your stop loss along with it, right? And as it moves further down, you move your stop loss along with it. That's all you need to do to secure more and more profits. Okay, because eventually what will happen is this price will, like, you go all the way down, right? And then you let's say you put it here, okay? And then your stop loss becomes here. And then eventually what's going to happen, the price is going to come up and hit your stop loss. So you didn't lose all of this and you hit your stop loss. So you move it every 10%, and that's how you maximize your gains. Okay, that is one of the strategies that you can use and that I use. Okay, so smash the like button if you like that one, by the way. I'm gonna just keep saying smash the like button, guys. 8%, yeah, it was 8%. Should I hold calls in a hope for a market to turn around? Absolutely not. See, this is what I'm saying. It's like you guys just know, you guys just do either or. Like, is there not a day where you can't stay out of the market? Like, come on. Sometimes you can, like, just say, listen, I'm just not going to trade today. That's okay, guys. That is completely fine, you know? Like, to not trade is okay. I'm deep in VIX. Should I still hold? I think you should take you should have taken profits yesterday, my guy. PE. Insurance worked. Absolutely. Thank you. I owe you a beer. Sure, you can send me a beer. How do you define those zones for SPY? Great question. Thank you for asking that question. So, how did I define them? Basically, look at the previous time that SPY consolidated. You see that? There is the low, sorry, botched that a little bit. You see this low over here and then the high over here. So, there is a very high chance that this is the level which we will come to kind of have a tug of war. There will be a tug of war between bulls and bears over here because this was a previous zone which acted as a support and a resistance. In the EGA Mentorship course, I call this a dual zone. A dual zone is where both support and resistance meets. Okay? And that usually acts as a very strong level for the tug of war between bears and bulls. Okay? Cool. Alright, let's get on to the next one. Microsoft 195 call 619 or 626. That might be a little risky. 626 sounds a little better, but I would honestly not buy 195. That's a bit too far. It's not too far. It's just what I'm saying is anything could happen. And I do like Microsoft long term. I have been, talking about this for a hell of a long time. So just don't choose such far expiries in short times, okay? Hey, Pagi. Selamat pagi, man. What's up? How are you doing? Good morning, brother. I smashed the like button. Thank you very much for doing that. Boeing 200 call 626. I do like Boeing long term. I've been saying Boeing for a long term as well. Let's see. 200 calls for 626 might be a bit of a stretch there. Personally, I think that I don't know, man. 200 might be a bit far for 626, but who knows? I do like the idea, but it's a little difficult. Uber puts is definitely a good one. Absolutely, you can take those. Let's see. I saw lots of bearish flow on Uber these past few days. 30.50. Oh, 30.50 is here. 30.50 is okay, but 31 would have been nicer. That's fine. I think you can hold it, close it out and profit whenever you can. Wait a minute. That's next week, right? Yeah, that's next week. Yeah, okay. But see, the thing is this is the thing that sucks, right? And I try to explain this to you guys a million times, right? You're gonna hold this contract over the weekend, and you're gonna pay Mr. Theta twice over the weekend to hold this contract. By the time Monday opens up, and let's say Uber gaps up, your contract's dead. That's the reason why I tell you guys, don't swing these positions over the weekend. Like, your contract's dead by Monday if you hold this by Monday. I can assure you. Unless something crazy happens and Uber gaps down. Okay. What's your thoughts on Tesla? I have a Tesla June 19 900 put. Thanks for everything. Well, Tesla has been super bullish lately. I personally don't like betting against Tesla, so I don't want to cover this because honestly, I have no input here. It could go either way. And I have, the intrinsic valuation for Tesla is way below 900. Like, in terms of actual value of the stock, there's so much in depth. If you ask me, I would say the stock is only valued at $400 or $300, right? But then, there's a lot of premium built into the stock. So it is, one of those things, man. All right. I'm going to see if there are more questions here and then come back to this Nike call. Let's see. How do I join your mentorship? Great question. And actually, let me just parlay into this and kind of give you guys this announcement so that you guys have this. Where did I keep it? Maybe, there we go. Okay. So, I don't know if you guys were here day before yesterday, doing the other live stream. I went through the EGA mentorship, and after which, a lot of people were questioning and asking me questions about how this works. So let me give you guys the lowdown one more time so that you guys understand this. Okay, if you are interested in taking the EGA and Option Swing Trading Academy course, which is run by me, I'm the educator of the platform, and I'm going to be the person who's going to be teaching you my personal system. Okay. Then you are going to have to sign up on the 20th and the 21st. Now, the web page is not live yet. The reason for this is because the way that we have designed this course is that signups are going to happen on the weekends. So Saturday and Sunday are the days where you're going to sign up. And then the course runs from Monday, Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday, Thursday, Friday. And then on Saturday and Sunday again, we'll have signups again. Okay? So you will get to sign up only on the 20th and the 21st. All right? And when you do sign up, then you will be given a key to access Option Swing for a week. And that key will be valid for a week. So you will get access to the entire Option Swing platform and access to me for that entire week. The first day of class is going to be on June 22nd. And meetings will be done through Zoom. Now, we did a community vote, and it seems like we're probably, I haven't confirmed it yet, but the community voted that they would like the time to be 6 p.m. PST or 9 p.m. EST. So we will aim to meet every day at that time to do the lessons. Okay? That is one of the small other things that you need to know. Okay? These are the curriculum of the course. I'm not going to go through them again. You can look at it on my Instagram, Everyday Growth Advisor. If you haven't followed me, let me write it down here so that you know. This is my Instagram. You can go follow me, and then you can look at the post that I posted there. If you're in Option Swing, it's in the Everyday Growth channel as well. Okay, so you will. This is the curriculum. This is the learning outcomes. What you will come out the course with. There's an entire day that I'm going to devote to how do you use everything that you learn with Option Swing, so that you can have a successful trading journey with us. Okay, and you will get a guidance using paper trading, which we will go through on Think or Swim, right? I will be sending you some, well, if you, by the way, if you are planning on joining this mentorship for sure, one of the things that you should start doing is going to my playlist and going to the active investments one and absolutely watching everything in here, okay? Watch every single thing in here, because we are going to be using all of this as, I'm going to be putting this out as a prerequisite for the course. So you need to go through everything in this video before you take the course, because if you don't, you're not going to understand a single thing that I'm saying. So this is your learning outcomes, and so I would recommend you to go watch all these videos, you know, as soon as you can, okay? Great. And then you'll have the introductions to the financial markets, option strategies, everything. You'll have the Discord, and all the meetings will be done on Zoom, okay? The price for this is going to be $251, and we're going to have a special discount for people who are a part of Option Swing. Now, the number is not 100% confirmed yet, but I believe that we're going to be giving a close to an $80 discount, okay? And the place to sign up is going to be optionswing.com. When you go there, there will be a secondary page right below where we have the existing product page. There will be another page, but it's not going to be live till the 20th and 21st of June, okay? So just keep that in mind. Cool. Done with the announcement. By the way, smash the like button if you're here for the first time, and make sure that you subscribe if you haven't. Cool. Let's see. When you draw your Fibonacci retracements, do you use pre-market or do you use previous days, high and lows? Great question about drawing Fibonacci retracements. There are many people who do them wrong. Now, Fibonacci retracements are not something that you can just use on every single chart and chart things up and down and left and right and center and whatever. I know, despite what other traders tell you, just trust me that Fibonacci retracements are best used for a retracement strategy. So when you have a overextension of something, right? Like for example, when we have the swing high to the swing low here, right? The best thing you can do is to see where it retraces back to. And it always retraces back to 61 and 50, right? So in this case over here, actually, I'm trying to get this Fib to highlight here. So let me fix this real quick. I think it's this one right here. Oh, that's the red one. So this one. Delete that one. Oh, messed up there. All right, let's just delete that one too. Okay. So let's say, how do you draw this Fib retracement here, right? Well, I like to go into a 1 hour time frame first of all, right? Oh, sorry, 4 hour time frame, right? And then you have a swing low and you have a swing high, right? So when you're plotting a retracement from the top down, you're going to use the swing low to the swing high. If you're plotting a retracement from this to this, you want to see how much we retrace here, you plot from here to here. If you're plotting to see how much is going to go from here to here, then you go from here to here. So you go the opposite of where you're going to plot it, okay? So for this case over here, we're going to use the swing low to the swing high. From here to here, right? And that gives you your Fibonacci retracement. We bounce exactly on the 50 Fibonacci retracement, right? And if you look at it comparatively to this Fibonacci that we're going to draw, right? Then you can see it coincides with the 61.8 right here. And I hope that makes sense to you. Let me try to fix the color of this one. Great. So that's how you draw a Fib retracement. And I know people try to use Fibs to plot overextensions and stuff like that, but I'm here to tell you that that is basically guesswork, okay? You are basically guessing. There is no logic in that at all, because Fibonacci retracements are meant to be used for you know, a correction rather than an extension. You can use it for an extension, but remember when you do that, it's going to be a pretty much like a situation where you're predicting the future. And none of us can predict the future the last time I checked. Great. So let's see. See if I can get more of this over here. Okay, I love this guy. Don't go balls deep. Exactly, that's what I'm saying, man. Don't go balls deep. If you have call positions before the drop with still a month, ooh, what the heck just happened? Okay, let's see. If you have call positions before the drop with still a month expiration date ahead, should hold or roll it over? Hold, for sure hold. And then when you are in a lesser loss, you can roll it over. That's what you could do. I deleted my Robinhood apps yesterday so I don't see it the bad day and get stressed. That is another option, right? Any differences in benefits of VIX, UVXY, VXX? They are all three different things. UVXY is a leverage ETF. This is has 1.5 times leverage. VXX is an ETN. I have done a write-up about this on the Option String chat. If you go into the educational chat and you go to the pinned messages, you'll see it. Okay. Let's see what else here. What do you mean by stocks are going to get squeezed? Well, there is an infographic over here that I put out that explains it. Go to my Instagram and go find the go find the infographic that I put out about short squeezes. I'll leave you a link for podcast in comments. Sure, no problem. That'll be great. Or you can message me because I've tried links and I've tried working that way, but for some reason it's not helping me. Moving stops up is a great tip that helped me tremendously. Awesome. Glad that helped you. Sometimes my stop order doesn't fill with the price that I write. Any advice to pick a better? Go read my recent post on Instagram with regards to the spreads and how do you fill them. If you are trying to fill something of a contract, there's always a bid and ask price, which is the buyers and sellers. And if you put your price closer to the bid, you will always get filled quickly. So a price between the bid and the mark will always get you filled quicker. Okay, can you roll? I keep hearing you talk about theta killing over the weekend. Do you mainly do weeklies or do you generally fire expiration dates at least for so that theta doesn't kill you? I've talked about this before. The best time horizon for contracts are generally 50 to 80 days out. Okay, 50 to 80 days out is the best time frame for a blended Greek and for a stock to turn around. Okay, so I always recommend 50 to 80 days out. Share love, thank you for doing that. I encourage watching the active investments video, really helpful. Exactly, that's what I'm saying. They're all golden. Like dude, I'm telling you. Okay, now we go back to do the tickers. I did not skip over. I was just trying to get some of the non-ticker questions done because those get lost in the mix, and the tickers, they go on forever, guys. They never stop. So let's see. We were at Nike. Where are they? Nike. There we go. Okay. Nike 104 call 626. I'll do this pretty quick. Nike 104. Wait, you have calls? 626, 104. Oh, that's a big move to make, man. If this market doesn't turn around, then probably not. But that's still very far expiry. Very far strike. You could hold it for now and see what happens. Reassess it on Monday. RTX 90 calls 921. What is RTX? RTX stock is. Wait, is that really Raytheon? Oh yeah, it is. Oh, dope. I actually like this company. Wait. Yeah, it is Raytheon. Raytheon RTX stock. Yeah, it is Raytheon. Okay, cool. All right, let's see. RTX. You said 90 calls for 921. Jeez, really far expiry. Really far strike. You're betting on it to go and break all-time high, and right now the market's selling this off. 921, hold it, man. What can you do about that? I mean, you can't really do much about it. How do you join your mentorship? I went through this already. Play $70 calls, 1120. That's a very far strike. Jeez, absolutely crazy. That's, I don't know, man. Personally, I wouldn't play that. It's too far and too long, and that's not a good option to buy. DXLG 250 calls expiry. What is DXLG? DXLG. Dude, this stock literally has $26 million market cap. Absolutely do not play that. You're gonna get burnt. ETN $90 call 626. ETN. Let's see. E10. Oh, this is the one that does. Hold on. I'm pretty sure that they have a bunch of holdings, right? Okay, this one might be a good one, but let's see what you chose. You did $90 call, 626. Okay, that's a bit better. Yeah, I think you should be okay with this one. Yeah, sure, hold that one. I think that's a good one. Seems probable if we can recover and bounce off this level here, right? I see some, obviously, volumes and shit are completely like stupid right now, but you know what I'm saying. Should I continue holding SPY 225 July 17 puts, hoping for a second drop like March? That's up to you, man. What I'm saying is, what I see is the drop already happened. We got our 5% correction. If we are going to go for another drop, then you can decide if you want to average down at this zone here. And if we fail to break the zone, then sure, right? That would be the way you can look at that. Should I get rid of this? I got greedy the other day. Microsoft 200 calls 7.2. Yes, you should get rid of that. Absolutely. Too far. Okay. Bottom side. Wait, what's going on here, Kirk? I think your first message got deleted. I'm not sure. Bottom side Iron Condor challenged at 236 short strike on QQQ. Cut it open or hope expire worthless. 236 good support on QQQ. I can't see your whole message. Maybe something got retracted. I'm not sure. CCL 25 calls. CCL. Let's see. CCL Carnival call. CCL. Yeah, that one's up big time, right? I think CCL's up big time. It is, yeah. Let's see. You're saying 25 calls 7.2. A bit too far, man. No, too far. 7.2. Even though you got time on that, I don't know. It's risky. You have 3 weeks, and you're gonna be holding it, and it really depends on today, to be honest. I like the idea, but the strike is a bit further, in my opinion. Tesla 1,200 calls and 619. Yeah, that's going to be a Wall Street bet play there. Just going to skip through that one. Just going to skip past that one. That's absolutely not, man. Hold or sell SNE 6950 626. SNE. I hope you don't get ticked off by me saying that, man. But you surely gotta realize that's way crazy, right? Like Tesla 1,200 next week. Think about if that will realistically happen. If it does happen, then I'm gonna be so happy for you. But the probability of it happening is like a black swan event. So I think you should definitely reassess the way that you're choosing that. SNE 6950 626 6950. Yeah, that looks okay. If we can get a retracement here. Sony, well, actually Sony was down, right, pre-market. I'm not sure what happened, but something happened. I think they were up yesterday and then they came down. This is after earnings, so be careful with that one. Okay, thoughts on VMC 110 put expiry June 19. VMC. I'm gonna go through a couple more of these because I know that you guys want me to go through the tickers. So VMC 110 put expiry 619. 110 put. Yeah, looking good. Hopefully you don't get caught up in this mix, but it's looking good. Personally, I like that one. I hope that you're not planning on swinging this over the weekend, though. Just saying. 30 calls. Yeah, this one's fine. Amazon 2,900. Absolutely not, man. Come on, dudes. Bro, how's the stock gonna move like $500 within a week or two? Okay. All right. Never mind. No, absolutely not, man. I can't tell if you guys are trolling me or if these are like legit inquiries. Just be realistic sometimes. All right, let's see. Should I hold my UVXY? You should have sold that yesterday. I think you skipped over mine. No, I didn't skip over yours. Bruh, this fella always comes into the stream and puts some bullcrap up. Not sure what this is about. Okay. Ugh. Averaging down is the concept of buying a stock when it's cheaper and making it part of your existing pool of stocks at a cheaper price so that all the price of your existing stocks go lower. I am not Pinoy. No, I'm from Singapore, and I'm currently in Singapore. This guy's hilarious. Thank you very much. I take pride in being hilarious. Okay, let's see. A couple more. Let's see if we can do this. Okay, Gush. I personally don't want to cover Gush just because it's oil related, right? I'm pretty sure. I've already given you my oil thesis. I've already spoken about how oil is gonna be... I don't know what to tell you guys, man. I've said it on the stream so many times that don't get overly bullish on oil. I even wrote a huge article about it on the Everyday Growth channel saying that, you know, people are getting overly bullish on crude. And this is the reasons why I'm bearish on oil. There's over euphoria. Margins for refineries are very thin. And OPEC might not extend it. They have a chance of being flip-floppy. And supply is, you know, going to possibly increase again because margins are thin, right? So just turn up, man, for the live stream and you'll learn a lot, you know. That's all I'm going to say. Okay, Tesla June 900 put. This might be this might be possible, but I'm not gonna. I personally don't like covering Tesla. It's just not. It can go either here or there, man. So just be careful. All right. Great. I think I'm gonna stop right there. There's a lot more requests, but I can't cover all of them. Thank you guys for coming through to the live stream. I appreciate you. I try to skip down over, not skipping past you guys, but in the intention not to cover all the tickers, but rather answer some of the questions because some of you guys ask good questions and I feel like they need to be answered. So the tickers, if you want your ticker to be answered, turn up early for the live stream and put it up early, right? That way I'll cover it for sure. The earlier you come in, and remember, as this channel grows, this is what is going to happen. I'm not going to be able to cover all of the tickers that you guys have. So the earlier you get here, and the more often you post your live streams on the top over here, then I'll cover your ticker much sooner. So keep that in mind. Once again, smash the like button if you're here for the first time. Subscribe. And happy trading day, guys. Have a good one. And ding, ding, motherfucking ding.